Hello and welcome to Moneycontrol. You're watching Editor's Take. I'm Stanford Masters. The RBI's policy meet is underway and we're expecting a decision on the 6th of June. To tell us more about this, we have with us Madhu Chandade. Hi Madhu.
Hi.
So tell us, what are the key expectations now?
Given the macro backdrop, the most important expectation from the policy this time is a rate cut. Also, given the tight liquidity situation, there is also an expectation that RBI will change its overall policy stance from neutral to more accommodative. Thirdly, the market is also expecting some kind of liquidity boosting measure, including a section of the market who feels that there should be a special refinance window for the NBFC sector, which is undergoing huge stress.
So wouldn't you think that the RBI would wait for a full-fledged budget before actually deciding on any kind of rate action?
Well, that would have been the logical expectation, but this time is quite different because, as you have seen already, over the weekend we saw the GDP growth data. For the fourth quarter, the GDP growth was a 5-year low. And before that, we also saw the IIP data, which was a negative on the back of slowdown both in consumption as well as in investment. So there is an urgent need to revive growth in the economy. And you also have to remember that inflation continues to remain benign, below 3%, and what is more interesting is that the latest data shows that the core inflation has also fallen to an 18-month low. Hence, and there is also a problem that from the fiscal side, given the fiscal deficit picture and given the fact that the tax collection is below par, we do not have enough fiscal headroom to provide enough stimulus to the economy. Hence, RBI is expected to do the heavy lifting of reviving growth at this juncture.
But Madhu, don't you think that the RBI's action, if any, would address this issue?
That's a very valid question, because everyone, a section of the market at least feels that this a steep rate action by RBI is going to solve a lot of problem, but that is not the case because many of the issues are structural. If you look at the credit and deposit market, for instance, the credit growth has been to the tune of 13%, the deposit growth has been to the tune of 10%. The credit to deposit ratio is already alarmingly high. The incremental credit deposit ratio is exceptionally high. And that is because banks are still fighting for deposit in the market, and that is because there is a decline in overall savings rate in the economy led by a fall in the household saving. And that is not something which can be addressed by a steep rate cut at this point in time. And overall deficit in the economy, the combined deficit continues to be high, which also reduces the transmission. And because of this, although we expect that RBI definitely would cut rate by at least 25 basis points on Thursday, if not by 50 basis points, but that is not going to address the entire problem.
Okay. So thank you for your insights, Madhu. So there you have it. We are expecting at least a 25 basis rate cut on Thursday. For more news, views and updates, stay logged on to moneycontrol.com. Thanks for watching.